Hello and welcome to day 3 of the Hindu's COP29 Daily Tracker. Today we have with us Vibhuti Garg, Director South Asia for the Institute for Energy, Economics and Financial Analysis. She's the director and she has over 13 years of experience in the energy sector. To give an overview of what's happened on day 2, to our listeners, to our viewers who are joining in from across platforms, yesterday, which is day 2 at COP29 in Baku, the capital of oil rich Azerbaijan, climate finance talks took center stage with the G77 plus China bloc demanding an ambitious target of 1.3 trillion US dollars annually as part of the new collective quantified goal negotiations. We must remember that this demand is to pivot countries, developed countries, from the $100 billion annual pledge that they had made at the Copenhagen COP in 2009. The demand emphasizes that climate finance should prioritize adaptation, mitigation, loss, and damage, and it is to insist that this goal should not be viewed as merely an investment and rather as an essential support for vulnerable nations. Indeed, yesterday also, the United Kingdom presented an updated nationally determined contributions. We must remember that these are voluntary pledges, but nevertheless, the fact that it has done so is to emphasize that they're taking climate mitigation, adaptation, and reducing carbon emissions rather seriously. In order to understand all of this, and indeed what this means more for the developing countries, we have Vibhuti, as I had mentioned earlier. Thank you, Vibhuti, who is at COP29 in Baku, joining us at really short notice. So thanks indeed. So let me first begin with the big development yesterday, which we've had little time to really analyze and talk about. G77 countries, which is a rather old grouping, actually. In the aftermath of the Bretton Woods conversations and formed in 1964, which is expanded to 130 countries today, and really represents the entire global South and developing countries, if you will. They have demanded, and India, in fact, much earlier had said that we need at least over $1 trillion for climate mitigation and adaptation, and that this 100 billion is way low. But the fact that a grouping as large as that, and China has made this demand, and that to an annual contribution, does it make an impact? One, and secondly, when we have seen countries not even meet the 100 billion that they had pledged earlier, will this actually be meaningful, and will countries deliver, developed countries deliver?
Thanks, Kunal, for having me here, and good to speak from Baku, where all the action is happening right now. So yes, as you rightly said, the developed countries did not meet the commitment of 100 billion US dollars. So is 1.3 trillion US dollars annually looks like it looks definitely ambitious, but if you will look at the gap, I mean, what the world globally needs is about 5 trillion US dollars of investment annually to be done to achieve the 1.5 degrees, to limit the global temperatures to 1.5 degrees Celsius. So that's where we are today, because currently, in fact, the total investment so far in, I would say, renewable energy plus other supply chains is 1.3 trillion US dollars, and the developing countries itself need about 2.4 trillion US dollars annually. So there's a big gap, right, over there.
That's a huge gap.
So
I mean, a huge gap. Yeah.
Absolutely. So there is an ask, and this COP being kind of dubbed as a climate finance COP. So there are a lot of hopes that there will be a much more bigger commitment coming from the global north in terms of financing to the global south. If you will see, last year, I think we made good progress in terms of enhancing the targets. So we had tripling of renewable energy, we had doubling of energy efficiency kind of targets being agreed with so many countries signing for it. But how will that happen? For anything of that magnitude to happen, what is needed is finance. And that's where the commitment for finance is required. So yes, um, this is the ask. As I said, we need 2.4 trillion in the developing countries, while the ask is for 1.3 trillion US dollars. But are the countries gonna really start providing for that capital is a big question mark right now, and especially after US results of the US election. There is a fear that whether at all, that kind of money from one of the largest economies of the world, are they going to commit to climate goal or not? So that's also something we need to wait and watch. But I do hope, if not immediately from next year, this 1.3 trillion, but maybe in a phased manner, say from 100 billion to 500 billion US dollars of commitment starts um, from next year itself, and then incrementally to 1.3 trillion. Maybe that's how I see it. It won't happen in one go from 100 billion to 1.3 trillion.
Right. Yeah. So I was actually going to follow up with that as my next question, which is when this ask of 1.3 trillion is coming at a time when President-elect Donald Trump has already threatened to withdraw the United States from the Paris Agreement. He's in fact even threatened to withdraw the United States from the UNFCCC framework, which is even more ominous. So, given the retreat of the most wealthiest country with the deepest pockets to finance this 1.3 trillion to be retreating from the global stage. Yes, of course, the EU bloc and several of the Western European nations have re-emphasized their commitment. But when the largest emitter as well as the wealthiest nation, we see them retreating. And if I remember correctly, John Podesta was asked these questions when he was there a day before yesterday. Um, would we see a realignment of within the developed countries and China stepping up, or how does that space look like? I'm assuming it's rather nebulous, and you're going to be part of those conversations there. But yeah.
I think I'm one of those who really like to have like more positive outlook, or like have more hopes, just because not primarily maybe less out of environmental reason, but more of economic argument is going to play out, and most of the countries, including the United States, are gonna build more and more renewable energy. There is no doubt, and I think it's proven that economics are more favorable for renewable energy. The returns to investor, the profitability is now is where renewable energy is. So I think any new money should go where which can really, as I said, good returns to the investors, and that's where most of the money is actually being channeled towards. So irrespective of whether a country would like or not, but economic argument is clearly playing out, and more countries are now building renewable energy. While because of their, I think, domestic demand, they are also unfortunately stepping up some amount of fossil fuels. But last year alone, I think, for the very first time in the history, the investments to renewable energy and the grid infrastructure exceeded fossil fuels. The amount of investment in fossil fuels is huge, but it was for the very first time in the last year itself that that exceeded the renewable energy plus grid infrastructure investment exceeded. So I think we'll see
Right.
more of that happening on an
Right.
annual basis now.
So I mean, so what you're saying is that the economies of scale, the production required to serve 7 billion plus population globally has kicked in. Of course, China is the leader in this. We must remember in producing solar photovoltaics and solar panels. But then again, we are facing the uncertainty of possible restrictions of imports of Chinese manufactured renewable energy, which might lead to higher prices in the countries where these technologies are required. So I mean, I do like your optimism, and I would probably like to be optimistic as well. But do you do you expect the prices of renewable energy equipment to go up now, given the threat of the various import duties, and particularly America's United States position of increasing tariffs against China, and China is the country which is exporting most of the renewable energy technology and equipment.
Yes, you're right. There will be some short-term price shocks, like the way we had witnessed during COVID, or when there was supply disruption. So these kind of restrictions will definitely have a short-term impact, but at the same time, it also gives opportunities to other countries to ramp up their domestic manufacturing, or say for that matter, being in India, how India, through various schemes, government initiatives, more
Production
conducive
linked incentive
policies,
schemes. Yeah.
exactly, the production linked incentive schemes.
For solar panel
We have,
manufacturing in particular.
right, so even on the storage, we are building huge capacities, not only to meet our own internal demand. Most of the products so far in India were in fact, were being developed for exports, because even India, till a certain point of, I mean, we were also importing. We were also hugely dependent on China for
The
imports
Chinese,
of
yeah,
modules and cells.
yeah,
But with all the, imposition of duties, with better government schemes like PLI, we are ramping up production, and not only, as I said, to meet internal demand. So there could be more countries setting up these capacities, but they'll take time. I mean,
locally,
economies of
right,
scale, as we were discussing earlier, smaller will take time to achieve, but definitely there could be some short-term price shocks, but I don't see that playing for long. There'll be
right,
not all the countries are restricting Chinese imports. It could be, yes, one of the biggest demand centers like in US, but where India does have the opportunity, and maybe a couple of more countries can set up those capacities as well.
right. So coming to another trade fiction point, which has played out quite, messily in the past few, very recently in the past few weeks, was the EU's restriction on EV imports from China, saying that the Chinese have been subsidizing heavily their electric vehicle production. This is again another sort of impediment toward a climate goal, I would think. And if we had seen, if the roles had been reversed, if the technology was advanced, and if it was the EU manufacturing and sort of exporting their EVs, they would have not wanted these import high import duties, that
Restrictions, yeah.
restrictions. So are we also, is this a sort of a paradigm shift that we are viewing, where uh, a developing country like China today actually holds most of the high technology required for renewable energy, including refinement of the critical minerals which are required for batteries and etc. And if that is the case, um, aside from the price shock that you just mentioned, the short term price shock that you just mentioned, is there going to be an impact on the transition itself, because of the sort of protectionism that is playing out? And does this mean that there's going to be a slowdown in technology transfer as well, or does it also mean the other way around, where Europe feels that it might want to transfer technology to developing countries before China does?
I think this will be a point of contention always, and especially for the countries in the global south, where uh, even the likes of Europe have been putting up big prices for technology share, I mean, the knowledge share of technology. So this protectionism definitely, I will say, will slow down, but definitely the pace at which we were expecting the energy transition to happen, it will definitely have an impact. Yes, China is a world leader not only in setting up capacities but also, the entire supply chains to the extent of even critical minerals processing. They are one of the
Right.
big exporters to most of the countries who are setting up big capacities, including India. So there's a lot of dependence on China. Suddenly, while we have been talking about the China plus one strategy, uh, that's something, again, very difficult to achieve. So I think rather
Right.
than benefiting from the lower prices of Chinese imports, and if they are quality products, I think it
Right.
should
Right.
not be the case that I think that we should limit or impose so many restrictions on it, but we should try and meet our energy transition goals. Because in most of the other countries, especially the smaller countries, the demand is not that much that everything has to be met
Locally
through their
manufactured. Right.
own local domestic manufacturing. I think that's not
Right.
feasible, and you'll never have those price points. So that means, are you really then? Sorry, am I audible?
Yeah, you are. Yeah, no problem.
Okay. So, so are we, I think that's a very big price to pay. So for newer technologies, I think the strategy should be that different countries, say for example, green hydrogen, that's where, most of the countries now are trying that the other countries want to take the lead and not left behind the race. For
Yeah.
modules, cells, we have already lost that race to China. So I think now trying
Right.
to reinvent the whole thing
The wheel. Yeah.
is not ideal. It's not ideal.
Right. Well, okay. Let me now sort of come to the other one of the related issues which is on the agenda at COP29, which is this new collective quantified goal. Um, for a lay person, how would you explain this, and why, or how is it different from the 100 billion that was asked of the developed countries?
I think you might have also been hearing it's not just about the quantity, but the quality.
Oh, we lost you there for a minute.
Can you hear me now?
Yeah, yeah.
Can you
Now
hear
we
me
can.
now?
Yeah,
Yeah, sorry.
yeah,
So yeah, as I was saying, that it's not just about the quantity, but the quality of finance that matter. So when we are
yeah.
talking about this new quantified goal for climate finance, it's not just about raising the ambition from 100 billion to 1.3 trillion or even to 500 billion. We don't know what the final agreement is going to be, while the ask is for 1.3 trillion US dollars. Whatever the quantity that gets agreed, I think what also matters is the quality. And when we say quality, it means that the developing countries just don't need debt. They're already suffering from a debt trap because they have, under huge debt
Right,
pressure. So what they
right,
need is concessional capital. They are not
right,
expecting only grants, but they need concessional finance. I mean, you just can't give them money at the market rate. It has to be
right,
much, much lower. And there are different ways through which, pooling in of capital from different sources can really bring the cost of financing down. So whether
right,
MTBs can play a bigger role, put in low cost capital, which can really help in unlocking private capital. So it's not just about public money, private capital also has to play a bigger role. But you can't expect, only just a normal debt, because so far out of 100 billion, I think more than 68% or 65 to between 65 to 70% is all loans.
right. Yeah, right. Yeah. So, and as you pointed out, this is another thing which countries have been talking about,
Right.
particularly when it comes to, especially the loss and damage fund, which if given as a sort of a loan, it doesn't make any sense at all, and
Absolutely.
it's some right which they've been asking as a sort of a grant. Um, so uh, so to sum up what you've said, this it is not just about the amount of money, but it is about the kind of money that is given, which is
Right.
which is right. So which is is it a loan? Is it at the market rate? Is it as at a much lower rate? And if I understand correctly, maybe is it much more staggered over a time period than what is usually provided, or
Yeah,
all of
even
that?
the time, yeah,
So
yeah,
that's
even the
what.
time involved. Sorry, go
Right.
ahead.
Is that's so that's what we so why is it a new collective quantified goal? I mean, what's the I mean the phrase seems a little nebulous for a person who's not, it's- why is it the new collective and quantified goal? You know what I mean? So
Uh, Firstly, new is because from 100 to you are now saying, okay, 100 is not sufficient to meet your energy
right,
transition needs. So you
right.
really need to raise the ambition in terms of providing of capital from the developed countries. And also, I mean, in terms of more developed countries committing to more capital, while there is a formula based on which, different countries have to provide that capital, but I think some of the countries, the Europe for that matter, Germany, UK, they have done their bit well. But if you see US and some other countries, what was required from them, they have not met their commitment. So I think you need to bring in more countries to bring in that pool of capital, as well as it should not be just they should be more responsible and accountable for meeting that commitment. So far, that's not happened. Not every country. There are some countries who have over exceeded it, but on the other hand, there are some countries which have not even met what they were committed to. So yeah, while
Right.
we would have
Okay.
achieved $115 billion, but it is because some countries which initially had lower commitment to meet, but they over exceeded that.
But that happened only for 1 year, which was 2022, right? That didn't. I
Yeah,
don't think that's ever been exceeded beyond 112 billion, which was only in 2022, right? Yeah.
right.
Uh, right. So okay. So I mean, major ambitions, but uh, on very shaky grounds. To me, it appears to
Right.
be that to be the takeaway. Although I do understand that you might want to be much more optimistic about it. I think the other question I wanted to ask you, since this is, one is that it is a finance cop, the other is that it is coming around a time when um, more and more countries are beginning to to look at their own carbon footprint, particularly Europe, Western Europe, which has brought about this carbon border adjustment mechanism, or rather, it's now delayed. It's said that it will be implementing not by the end of 2025, but I think by the end of 2026.
26.
Uh, yeah. Um, what implications does that have on developing countries' exports? Because Europe is a large importer for several of, say, India's products like textiles and etc. Um, and also, what implications does it have for developing countries' own ambitions on reducing carbon emissions? How does one align? And are we going to see other countries, like say India itself, come up with a sort of a counterbalancing or a similar, um, um, I would assume, a tax structure based on the amount of carbon we produce, or is that something else? If you can maybe expand on that.
Um, right. So, with the CBAM kicking in from 2026, it will have a big implication for countries, developing countries, and they don't have. I think that's where again they don't have the necessary investment, and most of those industries are not like big players, and it accounts for, it's largely done by MSME players. I'm just taking the example from India. It's largely your scope 3 emissions, which, and the players that are responsible to meet those guidelines, or, from 2026 onwards, are the MSME players, and they don't have that kind of credit worthiness to raise money on their own. And set up more and more renewable energy to meet their energy needs. So I think there is a big impact that will be faced. Either their products will become more expensive, they will lose on the price points with other players who are from developed part of the world, and and they are able to meet those conditions. So that is one of the big reasons, India is fighting this case out at WTO, that it's unfair to developing countries because the industry here is not getting any support to transition early. And if they are very serious about both scope 1, scope 2, and scope 3 emissions, and as I said, most of these players are under scope 3 emissions in the developing country. So if they really want them to enable to kind of, leapfrog and deploy more clean energy technologies, they need more financial support. And that will happen incrementally. It cannot happen by 2026. So they should be given more time, ideally, and they should be uh, given more and more investment for those industries to transition. So I think these are the two big asks. And India is raising that, as I said, at the WTO forum, not only for India itself, but for other countries with similar kind of issues.
Right. Okay. Well, I just want to remind all our viewers that this is an interactive session. And if they have comments or questions, they are free to actually ask that of our guest here. And if we do not have, then we would continue. We're anyway almost at the fact end of our chat here. So I'll just quickly check to see if we've gotten any. And if we don't, I think we can let you go. I don't believe we do. I'm just checking with my team here as well. I don't believe we do. All right. So, Vibhuti, you're there for a few more days. I'm assuming. Are you there till the end of COP, at the end of the negotiations, or are you?
No, I'm there till 16th.
Okay. So we'll hopefully try and have you again when something more meaningful
Sure.
happens. And thank you so much for sharing all these insights. And thanks for joining us. And for all those who are
Thank you.
our, thank you. And for all those who are our viewers, please do tune in to our daily tracker, and also like us and follow us on your favorite social media platform. Thank you so much. Bye for now.
Thank you. Bye.